According to SoSo Value data, Bitcoin spot ETFs experienced a net outflow of $227 million yesterday, signaling shifting investor sentiment. The BlackRock ETF, IBIT, led all inflows with $135 million, raising its cumulative net inflow to $58.804 billion, showing consistent investor confidence. Meanwhile, ARK Invest and 21 shares ETF RKB recorded the most significant net outflow of $125 million, yet its total net inflow remains at $2.012 billion. Overall, the net asset value across all Bitcoin spot ETFs stands at $142.303 billion, with an ETF net asset ratio of 6.47%. Historical cumulative net inflows into these ETFs have now reached $54.47 billion, underscoring Bitcoin's growing adoption and institutional presence. Bitcoin's price has also rebounded to $113,000, its highest since August 28, and technical analysts suggest this higher high could signal a bullish reversal in the market. Market dominance for Bitcoin reached a two-week high of almost 59%, pointing to renewed confidence among investors against recent trends of rotating into Ether. This price resurgence coincided with the expiry of $3.28 billion in Bitcoin options at Deribit, which may have influenced short-term price action through the Max Pain theory. Traders and analysts are now closely eyeing the upcoming U.S. jobs report as a potential catalyst for further price movement. Despite the recoveries, Bitcoin is also facing short-term headwinds, with large holders offloading over 100,000 BTC in the past 30 days, the largest whale sell-off since 2022. These sell-offs have put downward pressure on the market, pushing Bitcoin's price below $108,000 and increasing downside risks should the trend continue. Additionally, futures funding rates have cooled to about $366,000 per hour, nearing the neutral threshold, suggesting dampening interest among leveraged traders. Analysts believe a further drop in funding rates could mark declining demand and potentially deepen the current correction. Notably, metrics are not universally bearish, as a significant divergence from broader financial markets presents a bullish undertone. While Bitcoin's market value has declined by 5.9% over the past 2 weeks, the S&P 500 and gold have seen gains, rising by 0.4% and 5.5% respectively. Historically, such periods where crypto lags behind equities and commodities have been followed by so-called catch-up rallies in Bitcoin. This divergence suggests that Bitcoin could be primed for a rebound, provided broader risk sentiment remains constructive. Whale sell-offs and cooling futures are concerning for the short term, but these are balanced by encouraging signs from traditional markets. As the ecosystem matures, ETF inflows and outflows, alongside derivatives, activity, and technical signals, give investors a complex but promising landscape to navigate. With uncertainty looming, traders and long-term investors alike will want to monitor on-chain flows, funding rates, and macroeconomic triggers for clues on the next big move. Stay tuned for more updates on market dynamics, and don't miss your chance to take part in Bitcoin's ever-evolving story. Join the conversation and shape the future of finance today.